Hey, Barry Burns with TopDogTrading, and today I'm going to share with you a Fibonacci and Forex stock market rarely taught trading tool. It is called the Fibonacci Spiral. This is not to be confused with the Fib Arc or the Fib Circle drawing tool. This is different. So first of all, let me just show you real quickly what it looks like. Then we'll talk a little bit about it, the mathematics of it, and then I'll show you how to actually use it on your chart. So I'm using Thinkorswim here, and we just go down here to Fibonacci Spiral. And basically, whoops, what you got to do is click and then release, and you'll see what it does. Let me just stop it right there real quick. So you can see it's not really forming circles because the circle tool would connect. In other words, it would start here, come around, and end there and create arcs. But no, these are expanding. These arcs, or whatever you want to call them, the curves, they continue to expand. And that's what the difference is between this and the Fibonacci circle or the Fibonacci arc drawing tool. Now, I don't want to take a lot of time explaining Fibonacci to you today. You can look that up on the internet, Google it, and you can get all the information you want. But just as a quick little, maybe 60-second introduction as to why we would even consider using these spirals. So your Fibonacci sequence is basically this, and it goes on, but this is the sequence. So 0 plus 1 equals 1, 1 plus 1 equals 2, 1 plus 2 equals 3, and on and on and on it goes. So that's where we get our numbers from. All right. Now, let's talk about how that plays out in nature. So this is a basic diagram of the Fibonacci spiral. All right. How is that calculated? So the spiral is created by taking the numbers in that sequence. And we begin with a golden rectangle, and we break that down into smaller squares based on the Fibonacci numbers in the sequence. We divide each square with an arc, and by doing that, the pattern of the Fibonacci spiral is created. So you can see there that you've got your number. So the bottom line is that mathematicians and scientists have found that this pattern is actually found in nature, everywhere in nature. It's just amazing. We find it in botanicals. You see this same kind of pattern in hurricanes. We see the pattern in the formation of galaxies overhead. The most famous example is probably the Nautilus shell, and we've all seen that, of course. But then there's my favorite, and that is a pretty girl in a swimming pool getting out and throwing her hair back, and the water forming a type of Nautilus spiral like that, a Fibonacci spiral. So you may like the Nautilus shell. I like the pretty girl in the bikini. But anyway, okay, let's get serious again. So how do we apply this to trading? So what we're going to do is it's going to be applied to a chart, and we're going to create support resistance levels that are both the confluence of time and price on support resistance. So what we do is we come down here to our drawing tool, and we choose the Fibonacci spiral. This is Thinkorswim again. And we have to click, and we pull it up to the high. Let's see here. Let's get that actual high there and lock it in. Okay, so it's created our spiral as I have shown you before, but now we're applying it directly to the price bars. And as you can see here, it is a projection, so Fibonacci projection out into the future. So I drew it from this low to this high. That's your impulse move, because that is where we had our major thrust. And then the market just went sideways from there. Now, what we're going to be looking for is the breakout of the next spiral. And it comes in right here. So you could look at this as a type of breakout trade if you wanted to, but it adds, in other words, you can have resistance above there. And we got, again, typical little false breakout, comes right back down here. Okay, but here, again, now this tells you this is a good time and price because it is an arc, all right, or spiral more properly. It is measuring both time and price in one tool. W.D. Gann talked about this all the time. So it comes together at that time and at that price, and that's when we look for the breakout. All right, let me give you another example. Here's how flexible this thing is, by the way. It's pretty cool because it's really based on ratios, as you saw. So you can actually take the same thing here And let me adjust the length of this. So same chart as you can see. And now we're going to draw it from that low up to that high, because that's the next impulse move, right? That's the next move from a low to a high, and then we go sideways. All right, so now let's come back down here and move our chart around a little bit. And you can see, again, now I want to be very clear about this. This tool is not a tool for measuring precision moves to the bar, to the penny, to the pip. We're looking for zones, for areas. So you don't want to use this alone. You definitely want to use this with other tools that you're already using that have been proven. So we're looking for a little shift here, and we break through it, and it's not obviously right on the line, but after it gets there, it goes up. Now this one's pretty good. So here we have a similar thing, and this is the kind of thing that I look for with this. All right, we've got resistance, 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 and again, this is now the time that it breaks out of that previous high. So for breakout traders, if you're looking for breakout of resistance, and both of these examples are showing you that, then this is something that you can add to your repertoire and say, okay, I'm going to wait until you get the confluence of time and price as indicated by the Fibonacci Spiral. And then if I get other good signals, volume, price bars, indicators, whatever else you use, you can use this in conjunction with that to add to the probability of your trade. Now, one question I know that I'll get is, hey, where's this tool on my charting software and whatever charting software you have? So I can't answer that question for everybody, unfortunately. I don't know the details of every single charting platform out there. I know this is on Thinkorswim, so please just contact your support team that provides you your charting platform and ask even if they have the tool, because it's not a tool that is very common. But don't think of that as a bad thing. Think of that as a great thing, because if you're using something that most people don't use, that gives you what? An edge. An edge, and that's what you're looking for in trading. This can be an edge where you see something on your charts that the person on the other side of the trade, of your trade, I should say, they don't see. They don't see. And that is why it's actually kind of great that it's not on that many charting platforms. Now, if you like this video, please understand, sure, it's free essentially, but if you got value from it, you have a moral obligation to pay it forward by clicking that beautiful little share button below. Also, if you're watching on YouTube, give me a thumbs up. And I especially cherish your comments. They really encourage me to create more free tutorials. Also, I'm going to give you a gift today, which is my rubber band trade. It has a very, very high win-loss ratio, and this is a trade you can actually start taking. I'm going to encourage you to do it on a simulator or demo account first, obviously, make it prove itself to you. But I'm going to give you all the rules, everything, and I want you to start making money. So it's a video that's 26 short minutes. And you can get it absolutely free by clicking on the image in the top right corner of this video or in the description below the video. And if you're not watching this on YouTube, then there's probably a link below or an opt-in form on the side where you can request it. And after that, I will personally email the video to you with the rubber band trade strategy.